Good afternoon. A very warm welcome to our February UNH Sustainability Alumni webinar. I'm Fiona Wilson, and I have the honour of serving as UNH's Deputy Chief Sustainability Officer and also as Director of our Sustainability Institute here at UNH. I'm also an affiliate faculty member at the Peter T. Paul College of Business and Economics. I'm really excited for today's conversation with four amazing UNH alumni whom I will introduce momentarily. Co-hosting with me today is my colleague, Alexis Dwyer, who is Alumni and Network Stewardship Coordinator here at the Sustainability Institute. And you're going to hear a little bit more from Alexis towards the end of today's webinar. We're really pleased to partner with UNH Alumni Relations to bring you this year-long Alumni Sustainability webinar series. We're bringing it to you, our UNH alumni community, because we know that we have hundreds of alumni from across the decades who are working in sustainability-related fields and who have deep expertise and valuable perspectives on these topics. We also know that there are thousands more alumni who don't work in the field of sustainability, but are certainly really interested in the topic. And so we've designed these webinars to allow you to hear from UNH alums who are leading experts in sustainability across different industries, different sectors. And today, as in each webinar, these alumni will share perspectives on some of the key trends, and hopefully you'll gain practical knowledge that you can use both professionally and personally. I think UNH is a very fitting host for this webinar series. This academic year, we're celebrating the 25th anniversary of the establishment of the Sustainability Institute here at UNH. We were one of the first universities in the country back in 1997 to establish a comprehensive university-wide approach to sustainability. And it is because of this long-standing commitment and the work of so many faculty, staff, students, and alumni across the years that UNH is today one of the top universities in the country on sustainability issues. We were only the third university to achieve a platinum rating in STARS, and today we're still one of only 11 institutions that has that highest level of recognition. STARS, or the Sustainability Tracking Rating and Assessment System, is a program of ASHE, the Association for the Advancement of Sustainability in Higher Education. And it's a rigorous reporting platform that measures all aspects of how sustainability is incorporated across the university, certainly our operations, but also our curriculum, what we teach in the classroom, the research that our faculty undertake, and also the way that we engage and support our local communities. And within this impressive group of universities that have platinum stars, we're proud to have the 5th highest score. Before we hear from our alumni today, I want you to share an example of why UNH is a national leader in higher education and sustainability. With the release of ASHE's 2022 Sustainable Campus Index, UNH now proudly sits at #1 in the investment category. We are the only university in the country with 100% of the available points within STARS for the ways in which we are managing our investments aligned with our sustainability values. As you may know, UNH's endowment contains charitable gifts given to UNH by generous alumni and other community members, and is stewarded by the UNH Foundation. These endowed funds are invested in such a way to ensure a continuing and stable funding source to support the current and future mission of UNH. This includes really critical funding to help strengthen our academic programs, to support deserving students, provide opportunities for our talented faculty, to enhance our facilities and address other areas of need across the university. Because sustainability is integral to our mission as a university community, the UNH Foundation established the Environmental, Social and Governance Endowment Pool back in 2015. And as of today, ESG qualified investments comprise now more than 50% of the Foundation's total portfolio assets of just over $275 million. And the Foundation maintains a strong commitment to evaluating all of our investments through that ESG lens. UNH's leadership in sustainable investing is thanks to the vision and commitment of the Investment Committee of the UNH Foundation, but also a group of dedicated volunteers who serve on the UNH Committee on Investor Responsibility, or the CIR. This was formed in 2017 to help support the foundation in sustainable investment practices and policies. And a couple of the people who are going to be on the webinar today have or are members of this committee. I think it's also important to note that students at UNH have also played a pivotal role in helping UNH think about how we best align our endowment investing with our commitment to sustainability. Over the years, students have encouraged UNH to consider the impact of our investments on the climate crisis, as well as helping shine a light on the growth of the sustainable investing movement. A group of students from the student organization Net Impact conducted a year-long research project back in 2013, which culminated in recommendations to the UNH Foundation. It was really the beginning of UNH's journey in sustainable investing, when resulted with the establishment of a sustainable investment sleeve. This was really thanks in no small part to the pioneering work of these students a decade ago. My colleague Alexis has been putting links to our online sustainability dashboard in the chat, and I encourage you to read more about our work. And please don't hesitate to reach out with additional questions or if you're interested in engaging with us on these efforts. But for now, let me introduce our esteemed speakers. We know that how we invest our money can be even more powerful than the products we choose to buy in shaping a sustainable future. Sustainable investing has seen substantial growth over the last few years, now accounting for over a third of professionally managed assets around the globe. And our speakers today are alumni, experts in this field, and we have designed a discussion to help you understand what these trends mean for you and for your own investing. So I'm really delighted to introduce Molly Bertone, Ed Farrington, Alison Pyatt, and last but no means least, Scott Sorensen. I will hand over to our panelists to tell you a little bit more about who they are and what they do, and we'll engage in the conversation. So Molly, why don't we start with you, your UNH connection, and then also a description of what you do and where you work and sort of where you sit in the investment landscape.
Sure. Yeah, I'm so delighted to be here today. So again, I'm Molly Bertone. I am a double alum. I have an undergraduate degree in linguistics from UNH, and then went back a few years later to do an MBA. I work for a firm called Clean Yield Asset Management, which is an investment advisory firm based in Vermont. We manage investments for individuals and families who wish to align their values with their investments. We also incorporate environmental, social, and governance, or ESG, criteria into all of our investment decision-making. What makes Clean Yield particularly unique is that we have a impact investing program where our clients can make private investments into community organizations that are deploying capital within our communities, like the New Hampshire Community Loan Fund, the Vermont Community Loan Fund, but we also enable clients to invest directly in small and growing businesses in Northern New England, primarily those with an emphasis on food systems and regenerative agriculture. In addition, we do shareholder advocacy. So as investors, when we identify an environmental or social risk that we feel is unaddressed or underaddressed by a company that we invest in, we use the rights, and I consider them to be responsibilities as well, of shareholders to raise those issues. And my role in this is as an environmental and social research analyst. That is how I spent my career. Most of my days are spent reading annual reports and sustainability reports and scouring through OSHA and EPA databases and reading NGO human rights reports. So I'm sort of the in the weeds perspective, I think, on kind of how ESG integration and shareholder advocacy happens.
That's awesome. Thank you, Molly. And I should also note Molly is one of our wonderful volunteers who serves on the Committee on Investor Responsibility. So thank you, Molly, for that work with the committee. Let me turn to Ed Farrington next. Ed.
Hi, Fiona. Thanks for having me. I'll try and be as brief as possible and not go too much into a commercial on impacts, though I'm always prone to do that. But I graduated '93, political science major from the University of New Hampshire. Grew up in Plymouth, New Hampshire, and I'm sitting here today in Portsmouth, New Hampshire, though I've kind of lived here, there, and everywhere between 93 and now. But Impact's asset management, by the way, my role is head of distribution for Impact's asset management. We're a $50 billion global asset manager, offices in London, Hong Kong, New York, Tokyo, and Portsmouth, which is, when people hear that, kind of those cities, and then Portsmouth as the last piece, I'll point out kind of the why that is. So many of you might have known from your time in the Portsmouth and Durham area, you may have heard of a firm called Pax World Funds. Pax World was founded in 1971, an asset management firm focused on socially responsible investing. It was acquired by Impact's Asset Management 5 years ago, and now we sit under one brand. But I also would highlight that one of the reasons we're able to maintain an office of investment personnel, finance, legal, compliance, sales, marketing, is because of UNH and our proximity to this incredible wealth of resources and talent. There are so many UNH alumni here that join me in our efforts every day. But as I mentioned, $50 billion asset manager, largely in the public markets, public listed equities, but uniquely focused on sustainable investing. So that's all we do. We are very much focused on, and I'll get into this later, investing in the opportunities that arise from the transition to a more sustainable economy. So we can dive into a bit of that later, but thanks again for having me.
Great to have you with us, Ed. And I should also note that Ed is also a volunteer member of our Sustainability Advisory Board here at UNH that was established a couple of years ago. So thanks so much for your work on that, Ed. Alison, let's turn to you.
Sorry about that. I hit my mute button.
No worries. It's great to have you with us.
Well, Fiona, it was so fabulous to hear the update at the opening of the session and to think back, I'm a UNH 92, the fun way to get a business degree, the hotel program. And I was thinking back and looking at where you are now versus when I started as a very squeaky wheel trying to get UNH to support an organization that was founded at the university and supports New Hampshire. Molly already mentioned the New Hampshire Community Loan Fund. And so happy that happened a few years ago. I've helped informally the student groups that you referred to as well, on both sides, formally with the endowment, but also the fossil fuel divestment student group, think through how to approach the administration and the endowment on trying to advance sustainable investing. I was so honored to be on the founding advisory, the Foundation Committee on Investor Responsibility group. We've hosted several social innovation interns, and feel really honored that my husband and I also have made a commitment to support the Sustainability Institute with a bequest in our estate plan. And because he has an a master's degree from EOS. In my professional life, I'm a partner and senior wealth manager at Veris Wealth Partners. We're an SEC registered investment advisor and a certified B Corp since 2011. We have offices in San Francisco, New York City, and Portsmouth. So national focus, not as global as Impacts. In 2007, we had 5 founders who came together with a vision to build a values-driven wealth management firm fully devoted to impact investing. And with my next gen partners, we continued to remain independent and have grown to over $1.8 billion in assets. As a firm, our mission is to create an equitable, just, and sustainable world, which is not normal in the investment industry. And we do that by helping our clients harness the power of the capital markets for positive change. And our clients are individuals, families, foundations. We help them not only achieve their financial goals, but also invest their portfolios to have impact across all asset classes, both in the public and private markets. We do this work because we believe that government and philanthropy alone will not address all of the most pressing issues facing the globe. And we have 4 main impact investment themes that we look at, which is environment and climate solutions, sustainable and regenerative agriculture, community wealth building, and one of my personal favorites, gender and racial equity.
Alison, thank you for all the so many ways that you support our work here at UNH, and it's great to have you with us today. And last but no means least, Scott.
Yes, good afternoon. Welcome, everyone. Thank you, Fiona. So Scott Sorensen, class of 92. Shortly after forming Vigilant in 2002, I was able to get re-engaged with the university, moving back into the Portsmouth region, and served on the advisory board for the Paul College from 2007 through 2018, which was a great joy. And we're certainly very engaged with the student population at UNH, which is also incredibly gratifying. We've got a number of alumni that have joined us over the years here as well, and they're just terrific students, come out very well prepared. At Vigilant, we manage about $2.3 billion on behalf of about 300 families across the United States. And what we've recognized is that families are engaged in the topic of sustainability at their kitchen tables. They're engaged increasingly at their workplaces. And importantly, they are increasingly engaged in their investment choices and investment decisions. And that's a terrific opportunity for us to engage families in that conversation, the conversation that we're having here today. Sustainability is part of our platform. It's not a choice. So we use non-financial factors across sustainability topics in our fundamental analysis of investments that we make in public equities, in public fixed income bond markets, and alternatives that we may choose to use in a portfolio. So it's a terrific topic. It is, again, very fun, very gratifying to engage in the topic with families.
Thank you, Scott, for that great introduction. We have a couple of questions I'm going to pose to the panelists today. But again, if you have questions that you would like to ask, we would love to have you put those in the Q&A, and we'll get to those shortly. I want to start out with the first question. So, for people who are perhaps less immersed in the world of sustainable investing, ESG, impact investing, socially responsible investing, all of those different terms than you all are, could you just help by explaining what do these terms mean to you, and how are these terms different? And also just a little bit about, Scott, you were mentioning about, why you do this work, but maybe for others, why do you do this work? So Molly, I'll start with you, and then we'll have others build on what you say.
Yeah, sure. I can take the first crack at the alphabet soup question. And I should apologize in advance. There's a lot of acronyms and jargon in the work that we do. And so part of what we hope to be able to do today is to unpack a little bit of that language and make it feel more accessible. So you've heard us talk about sustainable investing. You've heard us talk about the incorporation of environmental, social, and governance, or ESG factors. You've heard impact investing. And different folks have different definitions for those terms. When I talk about sustainable investing, I'm talking about ESG integration, which is the incorporation of material, environmental, social, governance factors into the investment decision-making process. And that is, I think, much of what is happening in the landscape today. Much of the growth that we see in sustainable investing is in the incorporation of ESG factors into investment decision-making and strategies out there. At Clean Yield, when we talk about impact investing, we're talking about private investments which have specific environmental or social objectives. I think there's other definitions of impact investing, which we'll hear about today. But we're really talking about it sort of in the private market as well. I'll let others sort of fill in. I know there's more terms that we can get into here. In terms of why I do this work, I think for me, I didn't spend my time at UNH studying business initially. When I was an undergrad, I studied linguistics because I thought, and I think language is fascinating. I took a class along the way, though. I took a class called EC 535 with Chris Shadler, and I became incredibly concerned about climate change. And finishing up my time at UNH, I felt deeply concerned about climate change and wanted to find a way to apply the skills that I had developed at UNH to climate change, which is hard to do when you're a linguistics major. And so I relied on those analytical skills. And that's what got me into investing, was sort of the intersection of analysis and climate change with an internship at Pax World. So I do this work because I think that there is an opportunity to use the rights and responsibilities that investors have to influence corporate behavior, to influence big issues, systematic issues around racial equity, around climate change. And so that's what motivates me to do this work. But I'm excited to hear what others have to say to these questions.
I love that, it was a class at UNH that really inspired, this journey for you, Molly. That's great to hear.
Sure.
Ed, I know you mentioned the term socially responsible investing when you were talking a little bit about the history of impacts and Pax World. Maybe you could jump in and just sort of add a little bit about that and the evolution and sort of where we've come from, where we are today.
Yeah, it's funny. Our firm is somewhat our history is a history of the evolution of this space. So I mentioned Pax World, founded in 1971 as the first socially responsible fund. So what did that mean? It essentially was a family that decided they did not want to invest in, at the time, the Vietnam War. So they didn't want to invest in weapons or anything associated with the supply chain that led to that. So that was really deciding what they did not want to own. And that's probably the best way to define the socially responsible investment term is screening out the things I don't want to own. Then we see this evolution, let's call it around 2000, 2002, when this ESG term pops up, which is environmental social governance. And that was a moment where folks were saying, well, can I use this information that companies are producing about their policies around the E, the S, and the G to draw better conclusions about the possible investment as to what I do want to own? What themes can I follow, and how can I judge the behavior of a management team based on their policies around the E, the S, and the G? And Impacts Asset Management was founded in 1998 to focus really on environmental markets and built the first environmental markets taxonomy. Along that period of time, Allison would be very familiar with this. We launched the first gender lens fund. So we're really a picture of the history of this space. But what I would say is most important for my own personal, the reason I joined Impacts about a year and a quarter ago was a desire to really to not be stagnant on this space, or to not be trapped by the term ESG, or to not be defined by the terms that we all can oftentimes really be confused by, as evidenced by the question that you opened with. And what I love about the Impacts position statement is we really try and say that ESG is a part of our process, but it's not our process. It doesn't define us. What defines us is we believe that we live on a finite planet, that the world is moving from a depletive economic model that used things once and threw them out, and that was both stuff and people, and we're moving to a more sustainable economic model. And that transition creates a tremendous amount of investment opportunity. It certainly helps you identify risks that we think will occur for the companies that don't understand that transition is underway. And we think that's driven by policy. So that kind of ties me back to my reason, which is my political science background. Policy drives the space in a tremendous way. Technology and consumer preference, all these things are aligning to kind of force the world through this transition, not to mention the pressures we feel from a changing climate. But we think that all of that creates this, is creating these revolutions, many of which are on the scale of the Industrial Revolution, in food, in the way we treat water, in the way we move from place to place, the way we create energy. And we see that as a massive thematic investment opportunity that if we understand it, we'll outperform. So we're very much focused on that performance part of the equation, and not focused on these terms or words. We're moving past it and saying this transition story is real, it's investable. Those who get it will win. Those who don't get it will probably continue to have problems and suffer. And we want to just be very clear to the marketplace as to what we do. We're invested in that, and that's all we do. So that's kind of why I'm here, and how it ties back to this political science person winding up in investment management.
Thanks, Ed. Many a great sustainability person was educated in the liberal arts, for sure. Alison, you want to?
I wanted to
add
just
that?
add, Molly mentioned the alphabet soup of terms, and I did share with the webinar hosts the Confluence philanthropy glossary of terms if you are interested in understanding the terms. But I think that they can be used as an excuse to not take action. And really what this all boils down to are various approaches to incorporate intentionality into your investments. And it's intentionality beyond the financial metrics of investing and looking at other types of intention around what's important to you. Just like Scott mentioned, you do this at your kitchen table, you do this around your consumer decisions, your philanthropy decisions. It's taking that same intention and applying it to your portfolio.
Yeah, beautifully said. Scott, anything to add on this question?
No, just that I think that it's important that for us, when we go through an investment policy statement process with our families, that we're trying to help clearly define these different terms, because they do get used interchangeably out on, out in the public. And so we want to make sure we define them, because what we do with that information that's shared with us from a family, some of that is very unique to that family and the values that they're trying to see through their investment platform. That's very important to them. Other instances, when we talk about ESG and sustainability from a platform perspective, that's just part of our process. And so, again, I think the conversation, families are very receptive to it. They're very interested in it and more actively engaged in that conversation. And so defining those terms is very important and very helpful.
Yeah, that's great, Scott. Yeah, I imagine, like many of us, you're really seeing that interest play out with younger generations.
Yeah, I think that's for sure. I mean, one thing that we see, and I'm sure everyone else sees it, it's very, very interesting. Mom and dad are now engaging in the conversation because their children are engaging mom and dad in the conversation. We see that all the time. It's great.
Yeah, it's really fun. It's great, isn't it? Love it. I think we'd be remiss if we didn't mention, there's been a lot of, I'll just say, noise in the media over the last, year or so about ESG investing. Some of that's been in the regulatory realm around pension investing. So for people not as immersed in this industry as you all are, what should people listening to this webinar make of all this kind of furor that we're seeing in the news about ESG investing? Scott, maybe we'll start with you on that question.
Yeah, we spend a lot of time in our investment process trying to separate noise from signal. And it's my take that a lot of what we've been getting in rhetoric over the past year is more noise. And so, even for people who aren't as engaged in the topic, I can come at this discussion from a purely risk-adjusted return perspective, and the transmission of being a good corporate citizen, how that translates to superior performance, and the evidence is growing in terms of the sustainability, no pun intended, on that performance continuing. And when you risk adjust that, it gets even better. So I really view the rhetoric of the past 12 to 18 months in particular, that's been pretty loud, as just noise along a path of realization that this is the right pursuit for society.
Very helpful. Alison, you're unmuted. Do you want to add to that conversation?
Sorry, I got sidetracked by the B Corp question in the chat and was responding to that.
Can I
Molly,
jump in on this question?
Yeah, of course, please do.
So, I agree with you. There's a lot of noise. I don't think the term ESG has ever been in the headlines like it has in the last year. And in some respects, I think that points to the amount of growth that this type of investing has seen in recent years. I also think it points to questions around greenwashing, which is important to bring into this conversation, because with such explosive growth in ESG and impact investing and the strategies that have gone along with it, there has been greenwashing. There are degrees in this space, right? So there are some strategies and funds out there where there is real deep ESG integration going into the investment process, and there's others where it's less so. And I think the same thing is true on the corporate ESG disclosure side of things too. As someone who reads sustainability reports, there are some companies that are really deep into looking at environmental and social issues and reporting on it. There's others that talk a great game, and the rigor behind it may not be as robust. I think what's happening now is a little bit of sort of a tricky growth stage, right? That with regulatory agencies in the US, that the SEC and oversees the other regulatory groups stepping in to really begin to put some frameworks around, well, what is a sustainable investing strategy? What is an impact investing strategy? And create some standards that give investors assurance that what they think they're investing in is actually what they're getting. Same thing is true on the corporate side. So increasing standardization around corporate climate disclosure is also really important, and increased validation around the metrics around, the greenhouse gas reporting footprint. So there's a lot of noise. We can talk about what's happening with states' attorney generals going after specific managers if folks are interested in that. But I think the big thing to point out is that I think it's a marker of sort of the iteration and growth of this work, that it is becoming more professionalized. It is increasingly standardized. It is becoming more robust as a result. It is not perfect. And I think we shouldn't let the perfect be the enemy of the good. I think there's still really wonderful strategies and investment opportunities out there. I think there are some corporations doing amazing sustainability work. I think the challenge is to really be able to look beyond that noise to understand sort of what are the investment opportunities out there? How do you sort through them? How do you make sure that you're getting good, reliable information?
If Fiona,
sorry,
go ahead.
Go ahead. Yeah, no, go ahead.
Yeah, just to really focus on the a lot of the noise is coming from politics. I think we can all, and that's okay, right? That's the job of politicians, is to try and create, try and do something that allows them to appease a certain constituency that moves them forward in their own pursuit of an office. That's the history of our democracy. But at this moment in time, I think I come back to this phrase of the truth shall set us free. And because when you look at the systems, and they're public, right? Texas is the most prominent, that is essentially saying to plan sponsors, a plan sponsor being the person at the workplace who's responsible for creating the investment menus that their employees can invest in their 401k plan, is the most prominent. What they're saying is, we don't want you to consider certain factors. And that really is, to me, that's against the spirit of why we have regulations that have put the investment decision making in the hands of the plan sponsor at the workplace and not in the hands of government, right? We've delegated that to say, if you have an appropriate process that you've put in place that identifies the best economic opportunities for your workforce to invest in, then that's really all you need. We're not, as a government, going to tell you what you can and cannot consider, so long as it's for the material economic benefit of the plan participant. That's the goal of these laws and regulations. To say to that group of investment professionals, you can't consider these things that you have identified as material and financial, that's not going to stand up over time. That can stand up over it through some noise and politics, but there's no debate left that's reasonable that says that these themes that we mentioned earlier are not real, right? We are transitioning. The energy mix is changing. The way we move is changing. The way we eat and produce food is changing. The pressures on companies. So just take for the most basic example, no one benefits more from wind and solar in the state of Texas in terms of economic lift and benefit. They're generating more power and wattage than any other state. So that will become the truth. The truth will be clear over time. And if we continue to focus on the performance we can generate by being on the right side of history, then this will be just a little bit of noise that occurred in a period of our careers.
Yeah, really, really. Thanks for sharing it in those very clear terms, Ed. That's really helpful. And I think, I'm going to sort of use that as a sort of pivot to our next question.
Fiona, can I add to what Molly and Ed just shared?
Of course.
I find these a fascinating limit on capitalism. To Molly's point about states being limited on where they can source to issue a bond, or to Ed's comments about pensions being the pension managers being limited on what options they can provide. But then think about the end investor. As an investor in a retirement plan, that your options are also being limited by many of these proposed policies, or not proposed, implemented policies. To me, it's just like, wow, this is from a group of people that are all about capitalism as this, what makes America great, and limiting capitalism. And I think it also, to the points of my colleagues on the call, incorporating ESG and sustainability and impact factors is just more responsible investment. It's due diligence that looks for the opportunity, but also looks to mitigate risk when you're investing. So why would you want to remove that from an investor's toolkit if they so choose to be more responsible with how they due diligence their investments?
Yeah, absolutely. So I think that sort of brings us to this, this space is complex, right? It is fast evolving. There is a lot of noise. And I think for some of us, that can cause sort of analysis paralysis, right? It's sort of a reason, like, we want to align our investments with sustainability, but it's so confusing right now. We don't really know where to start. So if there are individuals on the call who are interested in taking their first step with, aligning their investment portfolios with values of sustainability, what is some advice you would share for people? Scott, maybe we'll start with you, if that's okay.
Yeah, it's a great question. I think that investors first learn the terms. I think the piece that Allison shared out, I think is a great place to go and start, just to make sure that you're educating yourself on the terms, so that when you start to engage in conversation, you're having the same conversation, right? You're in the same discussion. There's an increasing number of very good pieces out there that are good foundational educational pieces that try and capture the topics and compartmentalize them into these different definitions that are confusing. And then I would engage in the professional advisory community, right? I think each of the four of us are engaged with people in our communities on a regular basis, and coming at it from an educational perspective, right? What are the opportunities? How should I go about it? What are the things I need to consider? How do I separate sort of the big picture ESG and the use of ESG non-financial factors in the investigation of a company and risk mitigation, as Allison just pointed out, from the things that are unique to me, that are really important to my value system and what I'm trying to achieve, either in an exclusionary perspective or making an impact. And one of the things that we find that I think was made earlier, Molly made the comment around, impact does tend to be more local in our experience. Things that people can be doing that are impacting their local community or their local state. So I think there are a lot of resources, but use professionals that are in the conversation every day, because I think they're more than happy to spend time in that conversation.
Yeah, that's great. Thanks. I imagine others have Molly,
Did you want to
on
jump
that?
in, Allison? I couldn't tell if you were.
Oh, you can tell I get
Okay.
excited about this question. Well, I think the first place is to start is to focus on what do I care about? And you can think, again, leaning into the examples we've talked about earlier, like, what am I applying to my consumer decisions, to my philanthropy decisions, to how I, talk to my kids? What is it that I care about? And then think about your portfolio. And if you're managing your own portfolio, or you're working with an advisor, or you have a 401k plan, start asking questions. The best thing to do is similar to what I did at UNH over a decade ago, is just start asking questions. Inquiry is so powerful. And even how we've invested, the things that our clients have brought to us, and when we take them to investment managers and say, how is this reflected in your portfolio? Our client cares about this. It does make a difference. Look at what the group of students did at UNH through their inquiry. And it does also require some agitation or iteration and constant inquiry. So just keep asking questions and think about, is my portfolio supporting the things and leveraging in a positive way what I care about? Or am I investing in a lot of things that are completely contradictory? We don't work a lot in the healthcare space. If cancer is something that's really important to you, you've been personally touched by that in your family, and you're investing in a lot of chemicals or things that are causing cancer, cigarette and tobacco companies, that might be an area that you want to be like, is that what I really want to be doing? Is this contradicting maybe some of the giving that I'm doing with my investments or with my total wealth? And I will say, from a career standpoint, we all get to work with amazing UNH colleagues. Just, we all work together, but also within our organizations. From a career standpoint, if you're interested in this, connecting with UNH, Fiona is so amazing, and all the work that she does. USCIF is a great resource as an investor or as for career resources. And then I would be remiss, if you're a woman on this call and you want to deepen your impact investing journey, there's an organization called Invest for Better. To Scott's point, there is no shortage of resources out there if you would like to do this. And I know any one of us would be happy to share those with you.
That's great. Thank you, Alison. Molly.
Yeah, just a few quick things to add. You guys have given wonderful suggestions so far. I always advise people to start by figuring out what you own. So if you have a 401k or 403b, or if you have some investments, look and see what the holdings are. If you just have funds and you don't know what's in them, there are some websites that you can sort of check those out. You can always go to the funds website and look at the holdings, or there's a group called Invest Your Values. It's a project run by As You Sow, where you can look and see what the fossil fuel exposure is of the funds that you invest in. You can look and see if they have prison involvement. You can look at tobacco exposure. So there are some really nice tools that are free that are out there that can help you just begin to look at what you own. The other thing to consider too is talking to the person at your organization who is in charge of your retirement plan, and finding out if there are ESG or sustainable investing options and what they are. There may not be options yet, but as Alison said, there is huge power in asking the question. So you might not get the answer that you hope or that you want, but simply asking the question can mean that the next person who asks gets a different answer. So I just encourage you all to, if you're interested in exploring this route, start by what's there, and then thinking about how you might begin to change some of those things that feel less comfortable to you.
I love that advice, Molly. I think it's really powerful. I'm going to move us to Q&A from the audience, because we've got some great questions coming in. And I'm going to start with a question from Andy DeMeo, who's one of our wonderful UNH alum, who was inspired to start his career in the investment and sustainable investing space. But he asks a question about what makes you optimistic about the future of your work. And I'll sort of combine that perhaps with sort of a question we were going to ask, which is, I'd love just to hear a little bit about some perspectives on, how do you see capital really flowing into the sustainable investing space? What sort of innovations are you seeing taking place? Particularly perhaps because, again, it's been in the news a lot, the IRA, or the Inflation Reduction Act, that's creating a lot of movement towards this space. So I'd love just to hear a little bit about that. So Ed, why don't we start with you? Oh, somehow, Ed, we're not hearing you. You're not muted, but
Can you hear me now?
we can. Perfect.
Yeah, strange audio problem. That. Okay, can you hear me still? Great. So let's specifically, a perfect example of how policy can help drive opportunity in this space is the Inflation Reduction Act, which is very much focused on transition technologies and moving us from where we are today to where we need to be, with the goal of 40% reduction of carbon emissions by the year 2030, and allocating somewhere in the neighborhood of $400 billion in incentives to help both consumers and companies move in that direction. So if you just follow that simple $400 billion through from incentive to where it actually shows up in the economy and begins to change our carbon footprint, there's just so many opportunities an investor can find in that. An example would be, an HVAC company you wouldn't think of as a sustainable company like Trane Technologies. Well, Trane happens to be one of the largest manufacturers of heat pump technology. Billions of dollars in incentives. Essentially, if you want to move to whether you're a company or an individual to a heat pump, which is a far more efficient tool and creates a tremendous benefit to overall emission savings, it's basically been made free through incentive. And who benefits from that? Well, companies like Trane. If you want to think about how the transportation system is changing, the incentives that will show up to buy an electrified vehicle, you don't necessarily have to buy Tesla, which has all its kind of headline issues, but you can buy something like Aptiv, which is the technology platform that many of these EVs will be using to make sure not only that they're optimized, but they're efficient going forward. So there's so many investment opportunities that, to Andy's question, what makes me optimistic? The reality is humans solve problems. We don't mire ourselves. All the noise is noise. It's temporary. We'll move forward and solve problems. Technology will help us do that. Policy will help us do that. And it's already beginning to show up.
Yeah, love that. I want to get to as many questions from the audience as possible. So I'm going to pose another one from John Rodat, who's a wonderful UNH alum. I actually met John when he was celebrating his 50th alumni reunion at UNH, and I gave a presentation on sustainability. So John, it's so great to have you on the call. John is saying, as a community foundation board member, I'm increasingly concerned about what perpetuity means with respect to our endowed funds. Very long range, they are dependent on economic growth, which increasingly seems to contradict sustainability, and which seems to increase economic disparities and thus increase need for our grants. So John is really asking for some reactions to that statement, advice, as a sort of a board member of an organization that is overseeing endowed funds.
I'd love to answer that.
Perfect.
Because we have, especially family foundations, I think somewhat because of the next generation and because of what feels like an intense pressure to address current issues, we do have a lot of inquiries, and I work with some family foundations that are doing spend downs. And what I didn't mention in my bio is I spent 3 years working for the United Way of the Greater Seacoast, and I was in charge of community impact and a $2.5 million grant making portfolio. We also moved to a community outcome program to try to address the pressing needs of the Greater Seacoast. And one of the challenges, I think a portfolio can do whatever you want it to do, but I think it is really important to weigh the pros and the cons of both options. And so, John, this is a roundabout way to answering your question, but in spend down, one of the concerns I have from my practical experience as a grant maker and knowing about the world is these issues won't go away. And while increasing grant making, thinking about different ways to use your endowed assets to create change, thinking of the different capital that you can use to create change beyond grant making, beyond investments, using guarantees, thinking about that that capital stack in a more integrated way, I think is really important to try to address everything that's in front of us. I think there can be some benefit towards an endowed model that, these problems will not go away. We are people. We will continue to need capital to address these issues. So I think it's a balance, based on the organization's goals and mission of, what can we do now, but also, if you do have a perpetuity focused model, that is also important.
Thank you, Alison. Great answer. There's a really interesting question here from Erica Newman, who's actually a wonderful community partner of ours in this space. And her question is, what is more threatening? Greenwashing, where over-promising and unethical promises are made, or this idea of kind of green shushing, that's how you pronounce that, where companies are actually starting to downplay or keep quiet on their ESG stances for sort of political cover. What's your reaction to that, Molly? I think, you're the perfect person to answer that question.
I am delighted by this question because I am feeling this one on the daily right now. So in my work doing shareholder advocacy, I'm having conversations with corporations about a range of issues. But in particular, the conversations around climate change and climate change reduction goals or greenhouse gas reduction goals have changed pretty dramatically in the last year to 2 years from how they were going before. And I think what we're seeing is this shushing that's happening, where corporations who historically have been pretty forward in really addressing their climate impacts are hesitating. They're dialing back what they're willing to commit to. They're lengthening the time frame of their commitments. They're hedging based on regulatory changes. There's also a considerable more amount of nuance in terms of what companies will say to investors, but also what they're reporting publicly. And I worry about it. I think we're sort of seeing the early edge of this. Like, I think this is going to start showing up in the next wave of sustainability reports and annual reports that come out. But I appreciate this question because I actually think that this is a real issue that is going to have a chilling effect for some time on corporate ESG disclosure. That said, the other trend, and this goes back to the last question about optimism, is that I have found that in periods when public policy is lagging on environmental issues, corporations have tended to step up and demonstrate leadership. And that's a pendulum that has swung. And it happens too on social issues, though it tends to be more discreet on environmental issues. And I think we're in the situation now where policy is actually trying to play catch up on some of these environmental issues, and corporations are pausing. I think that's going to continue to swing, though. I think once this sort of new wave of, in particular, climate regulation is clearer, we'll see corporations sort of pick up where they left off and begin sort of marching along on these issues. So there will continue to be greenwashing. There will continue to be companies that are hesitant to say much of anything on environmental and social issues. But I think the bulk of the companies which do fit in the middle of that bell curve will sort of get through this shushing phase that we're seeing in the moment.
Yeah, and I guess that's sort of some advice, for people who work for companies who are thinking about their sustainability efforts and reporting. I think what you're saying there is don't back off, right?
Yeah, I like to tell companies that investors want the warts and all approach. Tell us what's going well, but tell us more about what's not going well and what you're doing about it, because that's how we get better insight into management and management quality.
Yeah, being transparent. Yeah.
Mm-hmm.
Question here from, or comment and a question from Zach Angelini, and also another awesome UNH alum who's really worked in the sustainability field in the apparel and footwear industry. Zach, it's great to see you on the line. Zach is saying in his experience, he's mostly seen companies think about ESG from a sort of single materiality perspective versus double materiality. He says, I think doing a double materiality perspective will be critical for transformational change. And I'm curious if you're seeing companies shift towards a double materiality lens. Let's see who wants to take that one. Perhaps Molly?
I haven't seen it yet. some of the European companies are starting to sort of go down this path delicately, I would say.
Molly, could you just explain?
Yeah, do you want me to back up and explain double materiality?
Perfect.
I can start with, so I'll start with single materiality, which is when we talk about the integration of ESG factors, we're talking about those which could have material financial impact on the business. So what a company reports in its annual report are those issues which it considers to be material, could materially financially impact the business. Double materiality focuses not only on the material issues that could impact the business, but how the business could impact an issue. So the example that often gets tossed around is looking at not only at how climate change could impact a business, which is what much of our climate change reporting is about now, but also talking about how a company could impact climate change, which we see them do in terms of thinking about their climate impact, but they're not really framing it around materiality. It tends not to be a discussion yet around what is material in that regard. So yes, some of the European companies seem to me to be sort of tiptoeing in that direction, but I haven't seen any examples of like really great double materiality reporting yet. I think we'll get there though. It's in sort of the nerdy sustainability reporting conversations that I hear. So I think it's coming.
And Fiona, if I could just add to it, if you think about it over time, they become the same issue, right? And there's so many conversations around, what is the responsibility of a corporation and what is the impact of a corporation, not only on its shareholders, like this movement to stakeholder capitalism, or some of the even more interesting kind of economic theories of like donut economics, right? That there's a finite, the planet is finite. At some point, we push it to the point where the resources are so depleted that they can't replenish. And all of a sudden, everything starts to collapse and impacts us all as individuals, wherever we live. And yet we still have a responsibility to take care of ourselves and each other inside of those boundaries. So they really all become the same issue over time. And I think we're waking up to that fact every day. This is no longer hypothetical. When you look at the patterns that have emerged just in the American West alone, I mean, it's really severe when you see what's happening with water. And then you hear bizarre headlines like, well, these atmospheric rivers will solve for that. It's like, well, no, that's just not true. And we have to get companies, individuals, all of us to understand that, and to understand we're going to be living in this world that we've created. And we have now a responsibility, whether you're leading a company, working at a company, shareholder in a company, investing in a company, to understand how it's all interrelated and it will impact you across that chain.
I think that's a perfect and eloquent note to end on, Ed. Thank you for making that a wonderful sort of ending. I wish we had another hour to dig into these topics. I think we'll probably do another webinar in this series next year on the same topic, because there is so much to dive into here. But Alison, Ed, Molly, Scott, thank you so much for being with us. Thanks for all the work that you do in your professional lives to make investing more sustainable. Thanks for all the ways that each of you support UNH as well as alumni. I would love to hand over to my colleague Alexis Dwyer. Those of you who are on the call and want to get involved in this wonderful community of humans that are engaged with us, she can share a little bit more about that. So again, thanks so much to the panelists, and over to you, Alexis.
Thank you, everyone. So nice to meet you. I'm Alexis Dwyer, the Program and Network Stewardship Coordinator here at the UNH Sustainability Institute. And I'm delighted you've joined us today. And of course, we would love to keep connected with you. You can see some different ways we've listed here on the slide to get involved. If anything piques your interest, such as hosting a UNH Sustainability Fellow, which happens during the summer to work on a high impact sustainability project, or perhaps you have interest in coming back to campus to speak with students to share your experience, please reach out to me. I'd love to meet with you to discuss how we could partner together. And of course, we'd love for you to attend our other UNHSI events, so you can sign up for our newsletter and join our LinkedIn group as well, which is called UNH Sustainability Alumni. So you can just search for that, UNH Sustainability Alumni, in LinkedIn, request to join, and we'll approve. And of course, we hope you'll join us for our next session in the Alumni webinar series on March 21st. We can go to the next slide, where the topic will be sustainable food and food systems. We'll explore how food connects all aspects of our world and how foundational it is for sustainability. With the help of a panel of UNH alumni working in different parts of the food system, we'll discuss what this means for you personally and professionally. And you can see our incredible list of guest alumni speakers here on the slide. I'm really looking forward to that next month. So thank you so much for joining us today. I hope to connect with you in the future as well. And hopefully you'll join us next month as well. Thank you so much, everyone.
Thanks, everyone. Have a great day. Thanks again to our wonderful speakers. Thanks, Alexis, and we'll see you next time.